Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 4th of May, 2017. We're just pushing after 1:50 p.m. Central Daylight Time. Let me tell you, it's a brutal day to the downside in all of the metal markets. Gold, this is one of the lowest lows of the year that we're approaching now. We're going down to that 100-day average, or getting pretty close to it might be the better word. So we have to see what happens there. The silver market today down as well, but not down as much as the gold. But silver has lost so much to gold it can afford to be a trailer. The copper market still low. Another piece of data came out of China that continues to show their economy just slowing down. And that is something people have to be concerned about. It even is weighing on the energy market. Let's face it, China's a major importer of oil. If their economy's slowing down, they're still expanding, but it's the rate of expansion. I think this is the worst rate of expansion in almost a half a year that we're seeing. It's pretty bad. It's getting to be smaller and smaller numbers, and that's weighing on this market. How would you like to be OPEC going into the meeting at the end of the month? Gee, should we trim production? Let me see. If we don't, maybe we drop another $5. I think they're in a death spiral. I think no matter what they do, they have to bite the bullet if they're selling us the right story. Is the story that this market will get in balance in the next 6 months if they continue the production cuts? If it won't, what's the point of doing them? So big game there. What's the other game that at this point you got to be concerned about? The inflation scenario. And with gold down, with oil down, they're telling you a story that general markets are not inflationary. You're not even seeing the yen rally very much on this, the dollar down. And remember, what this does is in some economies like Europe, it probably gives the European Central Bank pause to say, you know, we still don't see that inflation's grabbing hold. We're going to keep an easier money policy, and their economy spurring along better than the U.S., and you're seeing that in their currency value. But enough of that. Let's talk about gold. How long have I been saying that if the market pulls back, and the word is if, first support, second. So somewhere between 1232.60, the 18-week moving average of closes, and the 100-week of 1208.20 is where I expect to see the battle fight for the support of the market if it's going to be good. This chart pattern cannot turn bullish unless it holds up and you take out this week's high of 1272.40. Now something else happened, and I'm going to get to it in a chart next. Here is what you've done on the pullback on settlements. You're in your down thrust from 1294 to 1228.60. I don't think you can argue that that's what the market's done. The bar charts have just let go, as you can see, and the support begins back here in these numbers, so you can fall a bit more. In terms of the swing line, you are still in a market that's got a higher high and a lower low, but it has let go from 1272.40, and the big event that happened, and we're going to come back to it right here, was this day when the market could not hold either, and this is in looking back, but the 200-day average at 1263.60 and the 1271.90. That's the day. In order to get bullish, you got to go up and take out that high within 2 days. Otherwise, what you have is a reversal with possible key momentum to it. So here's the market the day after, the day after. Now you got the market on the ropes because what had been support is now key resistance, 1262.70 to 1272.10. Now the market's dropping even more, and that's bringing you into that 100-day moving average of closes of 1223.40. In terms of, is the market getting ahead of itself? Well, one of two things is going to happen here. Either you're going to bend out these Bollinger Bands and this market's going a lot lower, or it comes down and finds its footing against this 100-day average and finds a way to get back over the Bollinger Band momentarily. It still doesn't turn the trend of the market. The trend of the market is the bias is down, the swing line is trendless, and you are oversold as can be. Does this embed? So what I'm saying is this market has spent a lot of energy to the downside. It's into an oversold area. It's under the Bollinger Band. Only 5% of the time do you stay under it, so that leaves 4% left. I'm going to come back to that in a minute as we talk too. And in silver, you'll see what I'm talking about. And here you are with the market knocking on the door of the 100-day average. This is an important area for the long-term bulls to take notice of. We'll see if they step to the table. The gold, silver, as I said, silver's gaining back a fraction today. But so what? It went from 68 to 75. It's a monster move. This is just a huge, huge move on the gold. Gold got under yesterday, the lower Bollinger Band. You're under it again today. So let's check and make sure that my grammar's correct. As you can see, you closed under it. So day one. Day two is today. You generally don't go more than 5. So unlike the futures, which have 1 day, here's 2. I'm looking for 116.12 to try to be the support zone. And you are oversold, and nowhere are you showing in the gold futures or this ETF that you want to embed. Where the embedding is taking place is the gold miners, which is hurting stock indices. Here you have a downtrend, lower highs, lower lows. There's something else that might get very ugly on this chart. You're knocking on the door of trying to get done where the 18-day average of closes gets under the 100, a bearish crossover, which could lead to lower prices in addition to this. So that isn't good. Now we get to silver, and I was reading on one of the wires today, and it was interesting. Somebody's watching what I do, and this is one of the main news wires. Somebody said, you know, May silver, 7 days in a row closing under the lower Bollinger Band. They went back and did the history like I've done, and they showed that this is an unusual phenomena, shows the strength of the break. Now, what they didn't say is often when you get that accompanied with embedded readings, the rallies are very shallow, and that's what I think you're going to be looking at here. Still, when you do rally, and all prices eventually get to the point where they'll hit a number they rally from, it's shallow. What else? You're starting to get the 18 coming to that 100-day average of closes. Could be very ugly. In the silver ETF, you keep running the lower Bollinger Band embedded. Same thing. I don't worry about how many days ETFs are under the lower Bollinger Band, only because I haven't done the study the way I have in the futures. May silver is something you want to look at. You don't get that very often. In the copper, you've gone from upper Bollinger Band, now to lower Bollinger Band. Interesting how you do this in this market, just back and forth. And as I've been saying, this market is offering a son of a gun time to try to catch a trend. I find it almost impossible right here. Almost impossible. These swings are not, there's no leg to it in the sense of it lets you in on a trend. It's not doing that. It's just moving back and forth like that. This is the guy that's getting rewarded here is the guy that picks tops against Bollinger Bands, buys the bottom against them, closes his eyes, lights a few candles, says a prayer or two, and hopes it goes back the other way. That's what I think is going on there. In the platinum market, you've now got a couple of days in a row under the lower Bollinger Band, and you're trying to embed. You often don't embed, but this is, see how this broke down? That's what you have to be watching in gold. Is it going to do the same thing like that, or is it going to get its legs under it? I don't know. This market's in trouble, and you're going to see that the 18-day average is now under the last swing line high, which means rallies are going to find resistance there. Keep your eye on the 3-day moving average of high. That's probably going to be the sell zone. And what I told my clients today was I think that the smart money is using this right now to bail out of the long palladium, short platinum spread that's been working just beautifully. Wouldn't surprise me if the market finds its foot here, but the momentum in that spread is questionable. Doesn't mean it's not still the trend, but it's questionable. If you had guts today, which I didn't, the sell in the dollar was the play, It had not had a trend, but it has the embedded reading. It lost that embedded reading on this rally early in the morning, and it lost it by 3 points intraday. It gained it right back on this break. It's kept it. If this market has follow-through, watch out, 9,800. And the interesting thing with all that is if you take a look at the bonds and the notes, interest rates are climbing, and it's not supporting the dollar. So that's always fascinating when you're looking at what these markets do. Well, let me tell you what I'm offering. Grab a cup of coffee in the morning and join me. So you got it. Grab a cup of coffee and we're going to review 40 charts, and I'm going to throw out day trade ideas and what I think the trend is, what I think the trade is doing, why they're doing it, ideas on the fundamentals. It's a 15-minute video, and I go through 40 charts. I'm not in it. I'm talking over my actual charts. They're done in black. I back it up with writing in the evening and throw out a lot of facts for you to mull at night and with specific trade recommendations. But the key, one of the keys, is really that morning video. I'd like to give you access to it if you haven't tried it before. 866-973-2077. Call my staff. They'll do it. You can go to our website. You'll see a carousel of free offers. Take advantage of it there. Under me right here on many websites, it says click here for Ira's free offers, and or if you're watching me on a YouTube video, click right up here, and what will take place from there is the form will open up. You'll see that icon, and you can just fill out the information you want. I'm Ira. Sorry for you gold bulls and happy for you gold bears right here, and it gets interesting starting now. Take care.